Bring that ass back like a boom, 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 boom.
Alright everyone, happy Sunday. This is Supernova. You're with Boom Traders weekly market overview. Week number 3 of 2023, January the 22nd, and here's your financial disclaimer. Basically saying that this video is for information and educational purposes only. We're not financial advisors, so basically anything that we say here should not be taken as financial advice to buy or short sell any security, and the risk is on your side. As far as the session goes, as usual, we have models. Do have some notes here: market price action, sentiment, and summary. I've skipped the seasonality part because, as I've said a couple of times, January is generally not a strong season or a strong month for stocks, but this one proves to be different so far. And the other thing is that we are in the third year of the presidential cycle, and you know that this is the best year for stocks generally. So it's a bit of a mixed bag from our seasonality indicators, and just not to confuse you guys, and of course we don't usually trade off of those things that much anyway. We have it for a guidance only, so I just decided to skip them this time. Now, as far as the market outlook, with the recent action for the past couple of weeks, since New Year's actually, we've moved the market outlook to neutral. Midterm is neutral, short term still positive after the shakeout on Thursday and the reclaim on Friday. The long term, of course, we still remain somewhat negative. As far as the overall market condition, we are on caution. The breakout model is on green, apart from Thursday, as I said. And if you are in the right sectors, I think the breakouts are working pretty well. There's been some rotation, which I will get to in just a second. And here's that second. So what's moving? I understand that some of you might be frustrated because the stocks had a lot of traction for the past year are now losing some ground to some of the beaten down stocks, and some of the ones that probably Cathy Woods would be buying are moving. So this also coincides with crypto, by the way. Crypto is moving, and that usually means that QQQ, Nasdaq, so highly risk on stocks will be moving as well. And if you look at, these are screenshots from Finviz. It's a free website. Just go there, look at the sector performance. But for looking at the top year-to-date relative performance, you can see something that we haven't seen clearly for the last couple of years. We have communication services and consumer side cyclical on top. Of course, basic materials and energy, we're used to seeing that, but not technology. Technology is number 4 in terms of relative performance year to date. And consumer defense is at the bottom with utilities. Now, if you look at the 1 week relative performance, what actually happened last year, there was a certain rotation in stocks. You can see the technology is number 2, only underneath communication services. So if you were actually trading stocks in the technology or the communication services, you'd have made money. However, if you're looking at utilities, industrial, consumer defensive, financial, real estate, strong sectors up to now, you would have probably been on the losing side. So this sector rotation is something that we are expecting in general when the market decides to be better. Now, I really didn't think that it will happen in such a fast pace, but now when we look at the price action, we will see that actually Thursday was a pivotal day that gave us some clue to what we might expect coming at the end of the week. So without further ado, let's go to the market price action, and starting with the S&P 500. So this is the weekly chart. And from a bird's eye view, I want you to note something. We've had this amazing uptrend. You can call it a channel right here that got broken, and that's perfectly normal for channels. Then if we just duplicate this line, then we're going to get another channel right here that we are in, and it's a descending channel. But what is actually happening right now is we are oscillating around the end, the higher part of the channel, but we're oscillating right here. And something that is normal for all basing structures, if you know, we're making higher lows. So this is the thing that is actually exciting for me, and I'm seeing that the market is trying to rotate. So let's start with the break of this channel. So as I said, we can make a rising channel. We can just draw a trend line right here. Any type of a trend line will do. You don't really have to be that exact. You just need to give you some sort of an idea, and I'll just draw it right here, the lower band. So you can see that we had this channel going up, touch right here, we're staying pretty much in the upper part, touch to the bottom, and right here in the third, fourth attempt, we actually got crushed and started moving downwards. So now, sorry about that. So if we are to look at this channel now and get this downward sloping channel, so you know these are channels that are going downwards to the right side, they are usually bullish. They're not bearish, they're bullish. So the channel will remain bearish until broken from the upside, but usually these downward looking channels, they do actually break to the upside. So if we're looking this as a channel, the first thing that of course gives us a clue is that we want it to break to the upside. That's the first thing. But then if you're looking just as a base or a cup and a handle situation right here, all by of course being a lower handle right here, you can see that we have one low, a lower low, a lower low, a lower low with a beautiful shakeout here at the bottom. Same thing right here, which held a couple of, in this case, weeks close below the lower band of the channel. Then we moved back, and on this attempt right here, we were unable to undercut the previous lows, not to speak about this at all. So we actually closed higher, and we are now fighting with the upper band again. So we've had one touch, 2, 3. This one was a high reject. You can see this bar just blasted, and it closed right here. Here's the close. So a beautiful shakeout for all the bulls that wanted to get in on this bar right here. But then we actually oscillated above these zones right here, which are some consolidation, and right above this zone as well, which is another consolidation. And now we are poking our head back again at the top end of this channel. Now that is on the weekly chart. Now if we go back to the daily chart, and I'll see what really gets me excited here for Thursday, is look at this line right here. So these are all the closes. We had one single close on this move down. We had a close right here. This is the close. And this is important for a couple of reasons. First, we have this stopping dead end right here. Then it flips this, and so this line here becomes resistance. Naturally, we are below it, so it's resistance. Right here, we're poking around it. This huge bar here get rejected. Again, we move downwards. Again, right here, we move down. Now we break, we go to the upper part, we come down, and now it's support. Come back here, not enough power to even get to this consolidation right here. So this is a lonely bar. You can call this a head and shoulders formation, this being the left shoulder, the head, the right shoulder. We get rejected. We gap through this line. You see, we don't flush down in fluid manner. We gap through it. We close that high right here below the line. We get back. We get another test of this line. So this is a huge, very important line right here. We get rejected. We move down to the bottom line of this channel. We do a flip. So we open right here. We go back in here. So they, and I mean institutions, big players, they definitely see this channel as well. We go back into the channel, and you can see how price is actually playing around right here. Not even looking at volume or other indicators. I just want to show you what price action is showing to me. We go back to this line, we reject, we go back, we make a higher low. So this is important. You see higher lows, and now we move higher. Here again, after we've been rejected for a fifth or sixth time from this line, you can see we're going back, jumping over this line again. We actually closed, I think, if I look at this candle right here, we closed right above it. Next day, we jumped below the line. Again, here, some rejection. You can see we open higher, we reject. We open lower, but now we move. And this is why Thursday is important for me. Thursday, we gap right underneath on the open, we close below, and on Friday we close above the line. We started above the line, I'm sorry, and we close right here. Now, the only problem I see with Friday is that it's a dead high close, so pretty much like a painted close, and that usually is a trap. Now, I don't mean to say that we might see bearish action, we might, but for me, what is important to see on Monday once the market opens is we hold this 390 line. Yeah, ideally, if we can help the market between the 400 and the 390, that'll be perfect, and we can expect the market to resume its action to the upside. Now let's take a look at QQQ. For the QQQ, we have a similar action, but not such an important line that we've been flipping around like crazy on the S&P 500. And this is just the daily chart. What is important to note right here on the QQQ is that we are actually holding this trend line from below, and we are above this zone. So this zone right here of consolidation is one area that I want to keep above, and we are going back. Now, we have this megaphone effect right here that I told you in chat. So this was a beautiful short that you could have done on this bar right here on the break of the megaphone effect. Now we're getting back into this and into the top resistance line. So QQQ definitely acting strong right here, especially with the sector rotation. And I think if we can hold for a couple of days right here, we might be able to blast higher and attack this trend line from these highs right here around 305, 310. See where we can do it is, of course, expect some resistance right here. We do have this huge gap from these bars, so this is a void right here, so around 305. If you want to consider any longs on QQQ, you should have considered them right here on Friday after this gap up again and move higher. Now the other thing that also is a little bit bothersome to me is you see this channel, and I said channels to the downside usually resolve as bullish, but channels to the upside, they are usually bearish. So you can see that this was expected, nothing out of the way. So you can see this is a bearish formation, and we gapped under beautifully. And now when everybody's thinking, oh my god, we are going down and we're going to be testing this line here again, this bottoming support, we do the Friday trick, we flip around and we close almost that high. So this is a very strong, you can see the volume is painted in gray, which means that it's bearish volume, but sometimes thinkorswim will do that. So IWM is just perfect. It's just holding in this upper range right here the double bottom formation right here. This is a higher low, and you can see the perfect rounding right here. A couple of weeks here to scare off bulls before the final move was made. So you can definitely see that this has potential as long as it's keeping in this range 179 to about 190 right here, and it's oscillating between these two zones. I think that we're good for a head fake to the upside. Of course, we'll just move to the weekly. Of course, this being very important right here, resistance. If you consider this to be the left shoulder and the head, and this is the right shoulder, a fail of this right shoulder usually means that we're going to go for the head, which is at about 200, but then we also have a double top formation right here from above. So above 200, and I'll just put a line right here so you know what I'm talking about. Right around here, we can expect to see some resistance, I think, and this line is no longer valid. We did have this one which was broken, so this one is no more valid, and of course this one too is looking for a downside target, but this one right here definitely remains from this head and shoulders formation. Last but not least, let's just take a look at Dow Jones Industrial. And Dow Jones Industrial is basically in the same situation. Now this is on the weekly chart. We do have the left head, we do have the left shoulder, we do have a head, very shallow here, no reaction whatsoever, and look at the lows that we are making. So you cannot even consider this to be a head and shoulders formation. Now let's look at the daily, and this consolidation right here held We have this support from below, and what happened on Thursday is we closed right here. We poked this resistance line, well, this support line, I'm sorry, and we got back into the channel on the upside. Now this is important. This could have been triggering a long position right here as well. We have 3-touch trend line here at the bottom. You can see, so we're starting from here. 1, this almost got it, so I'll consider it. So 2, we have 3, and then the 4th attempt, we poke it to the downside, but then we close that high. So we're closing right at the top of this range, so we might see some resistance right here. And as I said, as long as we're not opening, well, actually closing, because the close is more important than the open, as long as we're not closing below this range right here and below this line here on Monday, I would consider it to be a bullish signal. Now, of course, what we can do, and that'll be even better for the bullish cause, is we might just close right below here, a very small candle, and then on Tuesday we gap in again into this range. That'll be even better for the bulls. So this is what I have for the price action. In general, it looks good for me, although I'm a little concerned. As I said, 3 of the 4 indices closed almost daily high on Friday, so this is somewhat fishy to me. Now looking at the internals, I don't have a different section for internals. I just decided to do it the market price action this week. So looking at the internals, we do have, as I said last week, we were extremely overbought. There was some consolidation to be made, some pullback, and you can see all the oscillators right here. They retraced back to some midsections. Now McClellan is making something that is considered to be extremely powerful. I don't even see it right here. I don't think that we could, well, actually, right here you can see August, that's supposed to be 2022. It did something similar like that, but not from such an elevated, it's not from such an elevated level. Anyhow, you can see the McClellan is bouncing off the 100 level again to the upside. It's very, very strong. The Zweig breadth thrust moved from about 40 to 67 almost ish, which is the highest level recorded for the past. This starts from the April 2021, so almost 2 years. This is the highest level for the Zweig breadth thrust. So definitely some pullback was due. It happened. Good thing is that it happened on a very shallow price action, so I think we're in very good condition to continue to the upside. And if we zoom in on this QQQ and SPX line, you can see, and I just need to move a little bit lower time frame, but you can see that QQQ Nasdaq crossed above the SPX right here. And I told you a couple of times, every time since I've been covering this chart actually, that in bull markets that are risk on, we want Nasdaq to lead. So this is very important that they've actually crossed. Now, if you can remain with this Nasdaq leading the market, then I think we're in good hands. Now, let's take a look at the other internals right here. And you can see the put call ratio definitely dropping, that's to be expected. Then we also have new highs, new lows actually remaining above the zero line for a second consecutive week. I don't think we've seen this for the last year in general. So you can see right here 59 for the 59 here for Nasdaq and 30 for S&P 500. I told you Nasdaq's leading, which is good for the markets. What else we have? VIX continues to drop, although you can see it was rejected right here, VIX, by the midline. These are the Bollinger Bands. It was rejected right here. So we need to push down in VIX. And as far as the up-down volume, you can definitely see here's the New York Stock Exchange. It remained strong last week. This week started a little bit weaker. But every time you see this curl, you are pretty much expecting that we go down, and you can definitely see the very strong close that we had right here on Friday. Huge moves in the up-down volume. And if we look at the advanced decline issues, you can see that for what we saw in the sector rotation as well. You can see that New York Stock Exchange recorded Monday, well, that's actually Tuesday because Monday was a day off. So we have Tuesday being positive for New York Stock Exchange and NASDAQ, whereas Russell and Dow Jones Industrial recorded negative days on Tuesday. So Wednesday was negative for all of them. Then we had Thursday, and then we had huge days on Friday. Pretty much everyone, but Dow Jones had 3 out of 4 days of negative advanced decline issues, whereas NASDAQ and New York Stock Exchange had only 2. Now, other 2 things that I'm looking at, and you know these indicators, I pay attention to them. Look at the stocks above their 50-day on the S&P 500. S&P 500 is making highs. We're almost breaking that resistance from the top, whereas the stocks above their 50-day are moving slower now. So this tells me that there is a shift in how stocks are acting. Basically, we are not into a supremely overbought condition like we were right here and right here with this double top on this indicator. I told you this is looking very shady because S&P 500 was not as high as it was right here, and we rejected. We dropped right around the 50% line, and now we're going back, but at a slower pace, which to me is very, very good. Again, looking at the stocks above their 200-day moving average, this should continue to rise, and this is exactly what is happening. So you can definitely see that there's a curl right here. We're making higher lows on this indicator, and that is positive for the market. Now, I don't want to be overly optimistic, because the moment that you become overly optimistic is the moment that they come with this 2x4 and they just hit you and you go down. But I think that the market is in good shape. Of course, next week will be very important to see where we pivot to, either higher, lower. Ideally, as I said, some sideways action will not hurt us at all. So this was the market price action. Now let's move on to sentiment and do the summary. Now, as far as CNN fear ingredients is concerned, we dropped 4 points from last week. We hit it on, actually it was 63, but it doesn't matter. Okay, let's just say we dropped 5 points. We're still in the green zone, and I'm thinking that most of the people were surprised by this sector rotation, so they weren't really positioned to enter into technology and communication stocks, and that's not a surprise, to be honest. Most people are waiting for highs. Most people are looking at the upper portion of the chart and tables for performers. And we know that last year has been extremely difficult for technology and communication stocks. Some of them losing more than 80% in valuation. So a lot of these stocks are off traders' radar. So that's probably one of the reasons why they're moving so well, and especially if you consider the news. I mean, Google's laying off 11 or 12,000 employees. Wayfair is laying off 8,000 employees. Meta laid off employees. So news are all bad, and at the same time, stocks are jumping. So you can, draw your own conclusions where bad news are not bad news anymore, where we are in the market cycle. And one leading indicator, believe it or not, that I've noticed for the last year and a half is how crypto is doing. So when crypto is doing well, we are risk on mode, and I'm expecting some of the technology stocks to be moving. And if you look at the fear and greed index for Bitcoin, we jumped almost 10 points this week. We are in the neutral zone, just a point shy below the greed zone. And here's the thing. If you think about Bitcoin and if you think about crypto in general, it's a risk-on asset. A lot of people have been talking about being deflationary and sort of, but whatever you think about it, it's an asset that is showing that when it's going up, people are willing to bet money on technology, on new things, and basically general innovations and development. So for me, and especially for the last year when crypto was bottoming, because this has been a process, and several times in chat I've mentioned that I think that Ethereum at 1,100 and Bitcoin at about 16,000, 17,000 is a place where we can buy given the current situation in terms of price action. We've been there, bad news happening, and we are now above the FTX saga prices for both Bitcoin and Ethereum. So I think that this is starting to shape up to be a good trade right now, and the technology market is in good shape. Now, of course, this can change in an instant, and of course, prices can go lower. I wouldn't be surprised. So, so you know that this is how the markets work. But for now, it seems that this is turned out to be a good bottom fishing, so to speak. So I hope some of you got some of those cryptocurrencies at the bottom, or some of the technology stocks in general. And I don't know. There is time for consolidation. We are below, as you can see right here in the summary, we are below major resistance zone. So we might hit some resistance right here. We might need some time to consolidate. Hopefully, some sideways action, as I said earlier in the presentation. As far as the models set up in market, again, caution, caution, caution. The only reason for this caution is because we're right below these resistance lines. If we can hold on, that'll be perfect. Put volatility is coming down. Volatility is coming down as well by VEX. And of course, we do have recession, and we do have the Fed hikes, which are slowing down, hopefully. I'll cover the expectations in the next video coming end of January, because we do have a February rate hike, probably either going to be 50 or 25 points now, but I'll cover this next video. So hope this was helpful to you for your trading. Look at the sector rotation, look at how we are positioned, because this is important. You want to be positioned the way that big players are positioned, and not trade in and trade out of things that are falling out of favor. And please do like this video. It's very helpful for our channel. Of course, you can come and join in Discord. We have a lot of good traders, great ideas, pretty much trading all the time, every day. So hope to see you there. If not, I'll see you here next week, another video, and have a great week. Bye bye.